Top of the top, y'all, it's your boy Show tapping in, man. And today we're going to talk about a video that I actually made about 3 months ago called Pay Yourself First, based on a Profit First book and a Profit First method. If you have not already, go back and watch that video first. That's just a suggestion. But in this video, what I'm going to talk about is how we kind of changed up our income allocation over the last couple of months, and how actually cutting back on what we pay ourselves has helped us accelerate the business and in the long run make more money. So tap into this video, man. If you're like me and most other people, when you first get into real estate wholesale, if you are seeing success and if you are doing deals, you're going to start to see an influx of cash, bro. I mean, money, checks that you just have not seen before in any other industry that you did. You know, you might go from working a 9 to 5 and making $1,500 every 2 weeks to doing wholesale, and now you're seeing $20,000 checks, $30,000 checks. And if you're doing numbers like we're doing, then you're having $100,000 months, $150,000 months, and that's a lot of money coming from where we were or where you were a couple months ago or a couple years ago working a regular 9 to 5 or just doing a simple side hustle, right? So it's just very imperative that you know how to allocate this money, how to divide up this money so that not only are you not going broke, but your business is not starving either, all right? And that's very important, guys. And you can't forget, Uncle Sam gonna want his cut too, all right? So it's very important that we know what to do with this money, how to divide up this money in a way that continues to feed us and continues to feed our business as well, all right? So this video is strictly about how to reinvest the cash that you are making from your wholesale business. This is very important, guys. A major key. You gotta know how to divide the pie, right? Tap in. All right, guys. So first, I'm going to go through the 6 bank accounts that we hold. All right. We have 6 bank accounts because it makes it easy to divide up the money, know exactly how much we have in every account for every situation. All right. So first, we have an income account. It does not matter where the money comes from. If our business is making money, whether this is from an assignment, forfeited EMD, whatever it is, JV, doesn't matter. If we are making money, it goes directly into the income account, okay? Next, we have an operations account, guys. This is how our business operates. So we pay everything from there, from our marketing channels to our resources that we use month after month, paying our cold callers, whatever the case may be. It comes out of the operations account because that's what makes the business operate, all right? So 35% of everything that comes into that income account directly goes into the operations account, all right? And that's how we operate. We operate on 35% of the money that we make. So that puts our marketing and everything else that we do in perspective. We have to be able to fully operate our business on 35% of the money that we make, all right? Next, we have our tax account. We put 10% of everything that we make into our tax account. And some people might say, why only 10%? Shouldn't it be 15%? Shouldn't it be 20%? Well, in some cases, yes, it should be. But we choose to do 10% because we are in a high cash flow business. So a lot of money goes into that tax account. And because we are smart about the money we make and the money that we invest personally, then we only do 10% into our tax account because we have other accounts that help reduce our tax liability, like a SEP, which is a self-employment pension, all right? We can put up to $25,000 a year into this account, which reduces our tax liability. So instead of paying a whole bunch of money to Uncle Sam, we pay it to ourselves. We invest in ourselves, all right? We put that money up. In addition to that SEP, we also have IRA accounts, which are brokerage retirement accounts, all right? Which we can put up to $6,000 a year into those accounts and invest into the stock market, all right? So that's 2 accounts that we can take money from the business and save or invest for ourselves, which reduces our tax liability. In addition to that, we also donate money throughout the year to certified 501c3 nonprofit organizations that we believe in. So instead of giving all this money to the IRS and Uncle Sam, we put it in other places that are more effective for our future and for the things that we believe in, all right? Next, we take 30%, and that is what we pay ourselves. So I have a business partner. That's 15% for me, 15% for him. So 30% of everything that we get, that we bring in income is bust down the middle, and that's what we take home. It does not seem like a lot, but you got to know what we're making, right? So, all right, so that is 35 plus another 30 plus 10. So we're at 75% right now, right? And I'm gonna look at my notepad because I kind of forget. All right, so then also right now, we are saving up to pay ourselves, to put ourselves on payroll. So we are not just taking cash distributions, all right? So we're saving 10% of everything that comes in right now, set aside strictly for payroll. So generally, we will be getting 20% each take home, but we cut that back to 15% each, and that other 10% is saved strictly for payroll. So coming January 1st, we will actually start payroll where we are getting a set amount every month instead of just waiting for distributions, and we'll have the money saved up. So even if we go 3 months without doing any deals, we can still pay ourselves, all right? And that was actually a suggestion from our accountant, which was a great suggestion, and we have been saving money in that account ever since, and we'll be ready to start that payroll and be able to pay ourselves a handsome salary month after month, regardless of if we do deals or not, because we've saved that money up, all right? And then we also put away 12% of everything that comes in into what we call a war chest account, which is basically just a savings account, all right? So in addition to our operations account, we also save 12% of everything that comes in. And this is how we make our decisions on growth, all right? So if we want to hire a sales manager, somebody to come in and do sales, which we will soon because we also just purchased the office based on having that war chest savings. And so if we want to bring somebody in, and let's say we're going to pay them $3,000 a month, we know we need to have at least $9,000 in that war chest savings, because we want to have 3 months worth of whatever we bring on as a liability into the business, all right? Just in case the business goes sour. Now, we have never in our 2 years of doing wholesaling went more than a month without doing a deal. All right, so that 3 month cushion is more than enough for us, but we still need it. All right, and that's why we have our war chest savings, so we can have 3 months of whatever we decide to bring into the business, and that's how we make those decisions. So we will not hire a sales manager if we don't have 3 months of their compensation in their war chest savings. We would not have bought an office if we did not have 3 months worth of that lease or rent in our war chest savings, all right? That's how we make decisions based on growth. And so if our deals keep on coming in and we decide, okay, now in addition to sales and an office, we need somebody in that disposition spot who can sell these deals, we will not bring them in unless we have 3 months worth of their compensation already stashed to the side, all right? So that's the purpose of our war chest savings account. And then in addition to that, guys, we also keep 3% in a profit account, all right? And this is strictly for me and my partner. This is a bonus that we take home every 3 months. So we do this quarterly, meaning 3% of every dollar that comes in, we put into this profit account, and we stack it up until the end of the quarter. And then we bust that down in half, and we take that home as a bonus. So every 3 months, I know we're going to get a bonus, all right? And 3% might not seem like a lot, but if you're doing a lot of volume, then we're talking about taking home, in addition to the payments, distributions that we already get, we're taking home another $2,000, $3,000 plus each every quarter, all right? And we do with that whatever we want to. It's our profit funds, you know. It's stuff that we weren't it's not payroll, so it's not really accounted for. It's just extra money every quarter that we take home, guys. And that's how we allocate our money, all right? Again, the 6 accounts are the income account, operations account, taxes, war chest, owner's compensation, and profit. All right. So, and that's how we allocate our money, guys. And it works great for us right now. Obviously, in January, when we start doing payroll, then we're going to have to revise that, because we won't need to save. We won't need to have the accounts where we pay ourselves and the owner's compensation account. All right, we can kind of conjoin those, and then what we'll do is also have monthly distributions instead of quarterly distributions once we get on payroll, because we already have that set amount we're getting paid monthly, but we will have more money set aside based on the 15 and 15, so 30% that we bring in. We're not paying ourselves that much in monthly payroll, so everything extra will be paid out in monthly distributions, profit distributions. All right, so we're going to go back and revise that in January once we start payroll. But that's just an overview of how we do things, guys. And again, do with it as you will. Switch it up as you feel, makes sense for you. I definitely suggest you go and read the Profit First book, which is where this whole idea came from. We just kind of switch it up based on the level that our business is on. But I mean, by us cutting back from taking 20% each to taking 15% each and being able to put that into our payroll, save up for payroll, I mean, that is going to help us tremendously going into next year. We're going to see more money from monthly distributions. There is more money saved in our business from us creating this war chest account instead of putting everything in operations and just spending what we see. I mean, it is just lovely, guys. And then also the benefit of having these accounts and having that money saved and stacked up. Our bank reached out to us and said, hey guys, we see how much money you guys are holding in several accounts month after month. Let us offer you a credit card. All right. So $21,000 on a credit card that we didn't even have to generally apply for. They reached out to us and said, you guys are holding so much money. Let us give you some business credit. All right. In addition to that business credit, it's an unlimited cash back rewards card. That means every time we spend $1, we get 3 cents back. We're getting 3% back on everything we spend on that card. So just imagine how much that 3% will be. That's just like our profit account. So, I mean, in month after month, we spend a lot of money on marketing and other tools. So now, instead of using our debit card, we get to use that credit card and get 3% cash back that we can either pay to ourselves or put in our war chest and save for the business. All right. That is the power of having money saved. All right. Month after month, where you can show a high balance in your accounts. All right. So it's super important to manage your money correctly when you are in real estate wholesale, because like I've stated before, guys, we are probably seeing more money than you have ever seen before. And I know it's easy to go get a new car, get a new wardrobe, get some jewelry, get a girlfriend. And, that's what we make money for, especially as men. Now, women may have other reasons that they want to spend that money, but for the men, that's why we make money. We want to look good, feel good, and definitely have somebody that we love on our side and take care of our families, right? But before we can get there, that can take some time, guys, all right? And when that money's coming in fast, you may think you've already made it, but slow it down, guys, and break that money up, okay? Allocate it to the right places. And when you do that long enough, you'll start seeing those benefits and be able to reap those rewards, all right? So till the next time, man, it's your boy Show signing out. Don't forget, profit first, make sure you pay yourself, but make sure you take care of and pay the business as well. All right, let's get this money.